the first half of 2022 was not a good one for investors. It was not a good first half for markets. And let's talk about anything. I mean, if you bought stocks or you owned stocks in the first half of the year, you lost money. If you owned bonds the first half of the year, you lost money. If you owned cryptocurrencies, you lost a lot of money. If you had commodities, you made money. That's the only place really where money was made in the first half of this year. But it was the worst year for markets in over 52 years. How about that? That's saying something, right? 52 years. You have to go back to 1970 to see such carnage in financial markets. The S&P 500 saw the worst half since 1962. And that's after a rally last week. It pulled it back from the worst year since 1932 in the midst of the Depression. 1962, the worst year for the S&P. I was 2 years old. I'm 62 now. So that was a long time ago. Only 3 asset classes out of 32 were positive in the first half of this year. And the top 2 were oil. Brent crude up 47%. U.S. West Texas Intermediate crude, up 41%. The CRB index, which is resources and commodities, the commodity index, up 23%. After that, everything else was down. Every stock market index around the world, every bond market index around the world, virtually everything was down. So there was really no place to hide the first half of this year. And how bad did it get? Well, the stock market, let's take the NASDAQ. NASDAQ's down 30%. That's an eye-opener. You're invested in the NASDAQ, you lost 30%. It's not a good first half of the year for you. And unfortunately, I think it's going to get worse before it gets better, and I'll tell you why as we go here. Dow Jones Industrial Average, the best of all stock indexes, the 30 stocks that make up the industrials, it held up relatively well, I guess. Down only 15.31%. S&P 500 down 20.6%. That's the definition of a bear market. Once you're down 20%, you are in a bear market. You've had a bear market. Now, that doesn't mean if it goes up 1% on Tuesday that you're out of the bear market. It just means that it just bounced a little bit. And as I said before, the NASDAQ's down a whopping 30% as those tech stocks are getting clobbered. Facebook, even Apple and Microsoft, all these big stocks are really, really getting hit. And it all comes down to inflation and interest rates. That was the driving force in the first half of this year that has affected financial markets. And just, it's common sense. You have low interest rates, you have the Fed printing money, it's great for markets. That money finds a home in stocks and bonds. It's a liquidity thing. You can't make any money in bank accounts and conservative investments, although that's changing with interest rates going up. We'll talk about that later. But the bottom line is when you have low interest rates, or in our case, 0 interest rates for a really long time, the Fed quantitative easing, which is printing money, they were doing $120 billion a month. Or let's use a different calculator. They were doing 120,000 million a month. If you want to use millions instead of billions, right? We throw these numbers around, and I always like to put these numbers into context. A billion is 1,000 million. So if they were doing 120 billion a month to buy bonds, they were printing 120,000 million a month. That's a lot of money when you look at it that way. And what's a million? A million's 1,000,000. So we're talking a lot of money that went into the system to keep it together. And that buoyed financial markets. That's why we had this great bull market, even though the economy wasn't that great. Money has to find a home somewhere. And what we saw was inflation of the money supply, which is the definition of inflation, by the way. Inflation, the term inflation means when the money supply increases and inflates. Price appreciation is the result of monetary inflation. So the more money you print and the lower the interest rates are, the more financial markets and assets will inflate. This is economics 101. You don't have to be, a PhD in economics to understand this stuff. It's very, very, very simple. Now, the opposite happens. When you start contracting the money supply, stop quantitative easing, stop the printing, and start raising interest rates, well, all that liquidity and all that stimulus goes the other way. The result is asset prices go down. Now, the problem that we're seeing now is the Fed's raising interest rates to battle inflation. But inflation is being caused by, yes, all that money printing, of course. But most of that inflation went into financial assets. The reason why we're seeing inflation in consumer products and energy, there's other factors involved here. Yeah, that's part of it. The money creation is absolutely part of it. But there's other factors. There's the COVID pandemic that caused supply chain interruptions. There's the Biden administration's anti-energy policy here in the United States. We'll play some clips in a little bit about that. This administration is doing everything they can gleefully to keep energy prices going up. So we go to our clean, green energy deal, whatever they want to do. These crazy nuts that want to bring us there, where we don't even have the technology right now to do that. But let's destroy everybody's economic well-being by making energy prices continue to rise. So a lot of this is self-inflicted. A lot of the food inflation is due to weather conditions. We've had incredible weather conditions worldwide. That's really making it very difficult on farmers. Then you got the war in Ukraine that's causing disruptions in supplies of wheat, since they do 30% of the world's wheat production. We're seeing shortages and major price increases in fertilizer. And in a minute, I'll touch on the coming food crisis and the famine that we're going to see worldwide, and how it may even come here in a second. So the Fed raised interest rates quite aggressively as this inflation came under control. It's taken the air out of asset prices. We've seen the decline in the stock market that I just illustrated to you. We saw the decline in the bond market as interest rates have gone up to 3% on a 10-year Treasury bond. We see mortgage rates at almost 6%. This week it's 5.83%, double what it was just a year and a half ago. That's affecting real estate prices. The big bubble in real estate is over. As we start seeing people starting to lower their prices, we're seeing more homes come on the market, and we're seeing affordability, the worst it's ever been for housing. And as mortgage rates go up, you could afford less house because the payment, you can only afford a certain amount per month for your bills. If you can afford $2,000 a month, well, you could buy a lot more house when interest rates are 3% versus when they're 6%. And that's affecting the housing market. So we got inflation, and there's no way the Fed is going to be able to battle inflation with interest rates. Yeah, they're going to be able to destroy the value of your 401k. Yeah, they'll be able to destroy the value of your home. But they're not going to do anything for the price of gasoline with a rising interest rate environment. If interest rates go up another 0.5 point or 0.75 point in July, you're going to buy less gasoline? No, you're going to buy as much gasoline as you need to live. Are you going to buy less food? No. But you are going to buy less clothing. You're going to buy less discretionary items. And that's where you'll see inflation turn into deflation. But you're not going to see the overall thing. Look, you're going to see inflation in everything you need. And you're going to see deflation in things you don't need, but things you own. It's kind of a bad situation. Think about it. If everything you buy to live is much more expensive, but your net worth is going down because your house value is going down and your 401k is going down, well, that's a pretty bad situation. for the average family. And the average family is struggling right now. And that's the story, I think, of 2022. The struggles of the American family that is only going to get worse. And the Fed is hell-bent on continuing to raise interest rates now as we're entering a recession. Now, I told you weeks ago that we're already in a recession. Economists were saying, well, you know, we're probably going to get into a recession in 12 to 18 months, in 2023. I said, no, we're not. It's not going to take that long to get into a recession. The first quarter of this year had a negative GDP, minus 1.4%. Well, the Federal Reserve just came out this week. The Atlanta Fed, which makes predictions on the GDP, I mean, the second quarter already ended. So we have a lot of economic indicators out on what the, you know, you can figure out pretty much what the GDP is going to look like. And they came out this week and they said that the GDP, they estimate, is going to be minus 2% for the second quarter. A month ago, they thought it was going to be up 1%. A week ago, they thought it was going to be down 1%. And after economic indicators came out this week, now they lowered it to minus 2%. And the Atlanta Fed is very accurate on these things. So you're going to have two back-to-back negative GDP quarters. That, my friends, is the definition of recession. A recession is two back-to-back quarters of negative GDP. So we're in a recession right now. Forget 2023. And here you have a Federal Reserve raising interest rates into a recession. Typically what the central bank does is they start to lower interest rates when the economy starts to contract. We have a Federal Reserve who's hell-bent on destroying the economy to rein in inflation. And it's not going to work. As I laid out before, it's not going to work. Inflation in food and inflation in energy cannot be controlled by interest rates. And that's the big driver of inflation because energy goes into everything. So if you have rising energy prices, you have rising airline tickets. When the flights fly, and we'll talk about that later, you know, the delays and the cancellations that we're seeing in the U.S. airline system is just unbelievable. But when you have rising energy prices, the cost of shipping every product goes up. The cost of transporting it from China to the United States goes up. The cost of manufacturing anything goes up. So energy inflation is not being driven by low interest rates. It was driven by the Biden administration destroying the U.S. energy industry. And that's it. And the economy coming back from COVID. And now, of course, yes, you do have some influence with the war in Ukraine. The administration likes to come out and say, well, this inflation is due to the war. We had major inflation prior to the war starting, so that's disingenuous at best. And it's all about interest rates right now. That's what's driving everything in the economy. That's what's driving everything in the financial markets. And the U.S. Treasury market is now experiencing a liquidity problem. Nobody wants to buy our bonds. They don't want to pick up our bar tab. And month after month after month, we're seeing less demand for U.S. bonds. And as a result, the price of those bonds are falling and the yields are rising. And our interest rates are rising because everything's tied to the bond market. So the reason why you saw in the first half of the year the rapid rise in mortgage rates is because of the rapid rise in the 10-year Treasury bond. And as I've said in the past, I don't really care what the stock futures are doing in the morning because all I care about is what is going on with the 10-year Treasury bond. Because interest rates drive everything. And obviously interest rates have been rising. And the problem we have now is that the world is so, not only the United States, the world is so soaked in debt right now that it can't handle rising interest rates. I mean, there's trillions and trillions and trillions of dollars of worldwide debt. Interest rates go up. The cost of that debt goes up as well. And all nations that are full of debt, since the days of ancient Rome, once we see the debt levels exceed income, that's GDP. Once it exceeds 100% of GDP, the only option left is to inflate away the debt by debasing your currency. Right now, the GDP is 120. The debt to GDP ratio is 120% debt to GDP, which means we're over 100%, right? Well, go ahead, just look at history. Every time a regime, an empire, a country has more debt than economic income, they're in trouble and they're on a decline. And then you inflate it away by printing money and diluting the currency. And that's where we are in the cycle right now. We're going to see higher costs for debt, we're going to see more debt, and we're going to see the stock market tank even further. So the people on Tout TV, CNBC, and they're saying, well, it looks like the worst may be over. It may be time to start nibbling and buying the debt bond stocks. Don't believe them. Don't believe them. Until the Fed starts saying that they're done with their interest rate hikes, and they very well may do that relatively soon, and I'll tell you why in a second. But until then, markets still have a long way to go to the downside. And until we start seeing inflation start reining in, the Fed is going to continue to raise rates, regardless of what the economy is doing. And that's the scary part. I mean, the Nasdaq's down 30% in 6 months, and they're going to raise interest rates. We're going to see 2 quarters of negative GDP, the definition of recession. And they're going to continue to raise interest rates. Welcome to the Biden recession, totally caused by the administration's policies. You having a barbecue this 4th of July? Well, it's $10 more than it was last year. You remember last year, the administration was all excited and touting a 16-cent decline in the cost of a barbecue for 4th of July. Remember that? This was the tweet that the White House put out last year. Planning a cookout this year? Catch up on the news. The White House tweeted July 1st, 2021. According to the Farm Bureau, the cost of a 4th of July barbecue is down from the last year. It's a fact you must hear. Hot dog, the Biden economic plan is working, and that's something we could all relish. That was their tweet a year ago. Well, what's their tweet today? I don't see a tweet saying, hey, you're screwed. It's 17% higher than last year, up at $10. And you like hamburgers? Ground beef's up 36% from last year. All right? I don't see any tweets from the White House saying, have a nice barbecue this year. Again, though, it's all about energy prices. And this administration don't care. They're trying to transition to green energy, and to do that, they have to destroy the energy market in the United States, and you have to pay the price for it. Also, they're saying that because of the war in Ukraine and because of Russia, we all have to suck it up. And we have to pay the price to battle Russia. So we have to endure high gas prices. Now, Biden was making a fool of himself at NATO and the G7 overseas, as he always does. Why they let this guy out of the house, I don't know. But afterwards, he did a press conference, and he was asked about how long must Americans deal with these high gas prices. Listen to what he said.
How long is it fair to expect American drivers and drivers around the world to pay that premium for this war?
As long as it takes. So Russia cannot, in fact, defeat Ukraine and move beyond Ukraine.
All right, so it's all about Russia and Ukraine. That's why we have to pay high gas prices. Gas prices were going up way before they invited. I tell you, this big lie that they're leading with, Putin's price hike. What do you think? They think we're stupid. Like, we didn't know that prices were going up prior to February. Inflation was already 6%, over 6% before they invaded Ukraine. But, they'll just keep repeating the lie that it's Putin's price hike, Putin's price hike. It's pretty funny. It's not funny, it's sad actually, but the Democrats and their compliant media, it's the same thing. Let's face it, the media is the Democratic Party, it's their mouthpiece. They all come up with the same, they get the facts of the term we're going to use now. Right? Putin price hike. All of a sudden, everybody across the administration, on the media, were all telling us the Putin price hike, trying to put it in your brain through propaganda, which is what the press is these days, that it's the war in Ukraine, the reason why you're paying more for food and you're paying more for gasoline. Did it contribute to the last jump? Yes. But it's not the Putin price hike. It's the Biden price hike. It's Bidenflation. That's what it's called. So how much are you willing to sacrifice for the new liberal order? You hear about this? This is a new term now, the new liberal order, because the new world order was too creepy for a lot of people. So they came up with this new term that's floating around the administration and the media, the new liberal order. So the Biden administration is trying to convince us that we should be supporting the liberal world order. And it's far more important than the short-term economic pain that we're all experiencing right now. And I just mentioned, GDP is going to be down over 2% most likely, according to the Atlanta Federal Reserve, who has a very, very good track record of predicting this, especially after a quarter's over. And it'll be confirmed later this month that we're in a recession. I always tell you that by the time they tell you you're in a recession, you've already been in it for a while. The pace of layoffs we're starting to see is starting to rise significantly, especially in the technology area. Even Facebook is looking to cut jobs. Americans are cutting back on their spending at a significant pace, I'm telling you. Why? Because they can't afford to spend money that they don't have. All their money is going to gasoline and food and rent and mortgage payments. There was a recent survey that said a whopping 83% of all Americans have slashed personal spending due to soaring prices. 83% of respondents slashed personal spending due to soaring prices of food and gasoline, with 23% indicating that they have made drastic changes to their spending for financial survival. 10.5% of the 600 adults surveyed said they eliminated all non-essential purchases. And 72% said they made at least some changes to their personal travel habits. So again, there's only so much money to pay for things each month. So what Americans are doing now is they are not buying anything they don't need, which will cause some kind of a deflation in certain items. Again, everything you need is going to be more expensive. Everything you don't need is going to go down. We're seeing a dramatic, unprecedented surge in inventory to sales. That ratio is what retailers always look at. You know, how much inventory do we have in the warehouse and on the shelves compared to our sales? So we're seeing gigantic spikes in inventories for furniture, home furnishings, appliances, building materials, garden equipment, and a category known as, quote, other general merchandise, which includes Walmart and Target. And I'm looking at a chart of inventory to sales ratio. It just skyrocketed over the last year. So what does that mean for retailers? It means that we're going to see widespread inventory liquidations, and it's starting soon. You're going to see a major discounts on a lot of items as retailers try to get rid of all this inventory. And that's going to show a deflationary plunge in certain things. Retailers can't hold inventory. They got to sell it. A lot of times that inventory has been financed. So we're going to see aggressive discounting across the board, and it's going to accelerate this month in July. So, if you have the money, you're going to see discounts like you've never seen before. It's because nobody's buying anything. That's not a good thing. So getting back to the new liberal order, okay? Where is it here? I had an article here I wanted to... okay, here it is. On Wednesday, CNN interviewed a key economic advisor to Joe Biden named Brian Deese. Never heard of this guy before. But what he said during the interview is making headlines all across the globe. All right, listen to what he said.
Those families who say, listen, we can't afford to pay $4.85 a gallon for months, if not years. This is just not sustainable.
What we heard from the president today was a clear articulation of the stakes. This is about the future of the liberal world order, and we have to stand firm.
The liberal world order. What is that? No, thank you. I do without the liberal world order. Why does there have to be a world order anyway? We've got by very fine with countries running their own things and getting along with each other. Why do we need a world order of any kind? You know what a world order means? Totalitarianism is what it really means. No independence of countries to make their own laws, their own rules, their own economies. This has been the goal of the globalists, hence the name, forever. Liberal world order. Who are they to throw a liberal world order down our throats? No, thank you. I don't want anything to do with a liberal world order, and I'm sure that most of you don't either. Like I said, they used to call it the New World Order. George W. Bush was the first one to say that. It had too many negative connotations, so they came out with this new thing, the liberal world order. I think that's even worse. These guys stink at branding. They're not very good at branding. Really. It's just nuts what's going on right now. So the first half of 2022 was horrible. If you're an investor, and as I warned you for a long, long time on this program, too much exposure to the stock market, especially if you're getting close to retirement, was a big mistake. And that when the music stopped, many people would get hurt. And there was nowhere to hide in the first half of 2022. And again, I think the worst is still yet to come for markets. Because I don't see anything making things better anytime soon. I don't see energy prices coming down. Now, we're starting to see energy prices moderate. What does that mean? It stopped going up, all right? It's still high. I came in today, $4.75 is what I saw for gasoline prices. Whoopee, the high was $5. Okay, 25 cents less. But oil's still $108.46 a barrel. The war on energy continues here in the United States. You can just the Biden administration wants to shut down the Permian Basin in Texas that produces natural gas and oil. 40% of the nation's oil. And they're looking for regulations to curtail production. On one hand, they're saying, well, we got to get more production into evil oil companies. On the other hand, they're doing all this stuff to kill the industry. Shutting down pipelines, shutting down leases. Oh, by the way, there was a deadline on Thursday that they self-imposed by the government that they were going to release the rules for new oil and gas leases and what you have to do to get them, as difficult as it was going to be, and they just let the deadline pass without comment. So they haven't done anything. And now they're talking about shutting down 40% of our country's oil. It's just one thing after the other with these guys. But remember, Joe Biden took the podium Thursday and said that we're going to have high oil prices as long as it takes. Meanwhile, they're saying that this Russian-Ukrainian war may go on for years. All right, so get ready for years to pay higher gas prices. And it has very little to do with that. It has to do with what the Biden administration is doing to our own production capabilities. Before Biden became president, we were energy independent, which means nothing that happened in Ukraine would have changed that. We were exporting 25% of production. Now he's going to Saudi Arabia to beg them to produce more oil. It's a sick joke by blaming Putin for this. And the problem is, most of the U.S. citizens are brain dead, and they're going to believe the propaganda that the media and the administration are going to continue to put on you, that it's Russia, 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 Russia. And also, they're blaming the food crisis on Putin now, too. He said the reason the food crisis exists and the prices are going higher is because of Russia. Oh, by the way, pay no mind to the hundreds of incidents that we've seen across the country in the past few months, where food processing plants and warehouses have mysteriously shut down or been destroyed by fire. I don't know if that's underreported. There's 100 food production facilities and warehouses have had mysterious fires or planes crashing into them, whatever. Never happened before, but, pay no attention to that. It's all Putin's fault. So we're living in rough times, my friends, and unfortunately, I wish I could be optimistic and say that the rough times are coming to an end. Unfortunately, it's only beginning, and we have the worst leadership we've had in this country maybe ever. And the worst part about all this, it's purposely being done. The energy independence that we have has been destroyed under some crazy environmental wacko policy that this administration has. And by the way, everybody in this administration are radical leftists. Radical leftists. Every department cabinet head is nuts. We'll play some of that later in the show. And they're taking us over a cliff. Purposefully. That's the scary part about it. It's bad enough if an administration has bad policies that result in bad markets and bad economies and whatnot. When it's purposely being done by what many people believe, myself included, is an illegitimate administration full of communists, basically, run by who knows who, because Biden isn't running it. He doesn't even know what's going on. We still don't know who's running the country. But radical leftists have infiltrated everything that made America great. They've infiltrated every institution, the media, entertainment and Hollywood, our education system, our government. We have been infiltrated from within. And I can't stress that enough. And the whole plan is to destroy America. And it's working very well, by the way. All right, let's take a break. 732-237-9626 is our phone number if you want to be part of the program. My name is Lou Scatigna. You're listening to The Financial Physician right here on 92.7 WOBM.